Tracking the Trump and Modi meeting. While she was there, she also caught up with Teresa Barger, the CEO of Cartica Capital, and began by asking her what makes India their top bet. Here's an excerpt of that exclusive conversation.
From my point of view, Shireen, there are two things, formalization and financialization. So on the financialization, 98% of all the money in Demon went back to banks. Then from banks, it's been going into mutual funds, pension funds, and insurance companies because of this wonderful fact in India that 30% of the population are millennials, and they control 70% of household income. And so these are now coming into savings age, and they're putting their money into these financial products. And a lot of that, again, from a Modi reform, more money going into these institutional investors is allowed to go into the stock market and the capital markets in general. So we're seeing a financialization, money out of the mattresses, out of the gold bars, and into something that's really good for the economy.
Okay, but do you think that the strength that we're seeing currently in the Indian markets, this momentum is going to continue?
You know, personally, I think we might have a little bit of a rocky time when GST starts from next month. It's not going to be perfect. The IT backbone for it, I think, is very interesting, but it's quite ambitious. And I have never seen an IT program ever, an ambitious one, that was on time and on budget. Yeah. So, like all of them, it's going to take some time. So I personally think we might have a rocky time this summer going into the fall, but I still believe in the long-term story from the financialization and also formalization. And that, I think, the formalization is going to be very important.
But in the short term, do you believe that the earnings hit is going to be a significant one on account of the disruption that GST may cause?
For some industries, it will. There will be winners and losers. And the question is, how much is that going to affect earnings per share growth for the whole year? There may be disruptions that are temporary. When we do our analysis, we do a 10-year discounted cash flow, right? So we're going to look at everything over a 10-year period and then discount it back.
So you continue to be as bullish as you were on
India? Yeah, we're pretty bullish on India.
Yeah, so I was just looking at your portfolio. Top 5 holdings of Cartica in India: Page Industries, Shree Cements, Eicher Motors, TVS, and PI Industries. So you've got 2 auto companies there.
Two-wheelers.
Two-wheelers, specifically. Yes,
specifically.
2 auto companies and 2 two-wheeler companies specifically. But anything else that looks interesting? Anything else where we could perhaps see you put your money into?
Yes, we are also in a consumer goods company that we believe will benefit from formalization, as the unorganized sector has trackable transactions, and these are all then taxable, and they are on very thin margins. If they have to pay tax, they can't survive. And that's terrible for those businesses, but it's great for the Achilles heel of India, which is productivity. And so if we get more productivity, as we've got someone like Page, 60% of their competitors are the unorganized sector. Those can't survive in an age of GST and actual tax collection. And so people then will be able to buy underwear that's made, first of all, well, by people who obey the environmental laws, the social laws, as well as pay taxes, and there'll be a cheap price. And this will enhance the productivity. There are other consumer goods areas that we're in. There's another portfolio company you didn't mention, which is Marico. And we think that will also benefit from formalization.
Okay, well.